International mutual funds are those funds that invest in foreign companies. These funds are also referred to as overseas or foreign funds. Investing in these can be of higher risk exposure, but of course also chances of higher returns. Hey guys, this is Prarthana from ClearTax. A diverse plan not only spreads the risk but also taps the earning potential of different markets. Let's find out all about investing in international mutual funds. The first question is, who should invest in foreign funds? Well, smart investors have always been lured towards international funds for umpteen reasons. One, as you know, is diversification. Two, the economic cycle varies for different countries, and simultaneous investment in different economies actually ensures minimum loss and, of course, possibility of smoother returns. 3. Exposure to international markets can only broaden your experience and expertise. In simpler words, international funds invest in the global market. However, they are not for passive investors as they need careful and continual market study. Investors should be sure of their investment goals, both short-term and long-term, before investing. Check track record. They will help you choose a fund that suits your requirements. Like any other investment, investing abroad has its own set of pros and cons. Understand them thoroughly to make an informed investment decision.
Firstly, risk factor. Currency exchange rates fluctuate almost every day. For instance, in the US-centric international fund, if the rupee falls under the dollar, then you get more rupees per dollar invested. The NAV shoots up. On the other hand, if the rupee rises, then you get lesser rupees per dollar and the NAV falls. Requires constant vigilance. Political, social, and economic aspects in different countries can impact mutual fund performances differently, so investors must keep track of the market movement regularly. C. Scope for better market returns. By capitalizing on many economies simultaneously, your portfolio can fetch higher returns. Apart from mitigating risks, by diversifying, overseas investing can also boost the quality of your portfolio. D. Dual market risk. The other country's current market fluctuation and the sectoral market, real estate, IT, etc., can impact the performance of the fund. Hence, it needs a lot of research to make the right choice. Next, tax efficiency. There is also the issue of taxation that could prove to be a potential pitfall. For instance, hybrid global funds invest 65% to 70% of their corpus in domestic companies and the remaining in overseas market. Therefore, it makes the returns that are subject to long-term capital gains tax.
If you wish to make use of international funds for your advantage, research thoroughly before investing as well as during the term of holding the investment. There are the top 5 tips for beginners. So let's find them out.
Follow the basic principles of investing in a mutual fund. B. Read the offer document carefully and ask for clarifications. C. Understand the investment objective of the fund and the risks it intends to take. D. Analyze if their aspects are in sync with your investment strategy. And lastly, for region-specific funds, do some research and assess the feasibility of investing in those regions for the next few years.
Similarly, for country-specific or commodity-specific funds, if you are a pro-investor with a good understanding of domestic and global markets, then go for a 10% to 15% allocation to foreign funds. For instance, the US is deemed less risky when it comes to risk, returns, and rewards. However, Chinese funds, notwithstanding their high one-year returns, have already become riskier. So it is best to use overseas funds to supplement your main domestic fund portfolio. Thank you so much for watching the video. If you have any questions, any recommendations, any suggestions, definitely let us know in the comment section below. Also, don't forget to give this video a big thumbs up and subscribe to ClearTax's YouTube channel for regular videos on finance. Stay tuned and take care.